Good morning and welcome back to Almus Market Mornings. It's been a whirlwind weekend, kicking off with the viral Trump-Zelensky exchange, followed by the EU Commission meeting signaling support. Geopolitics aside, markets are bracing for tariff updates. Mexico, Canada, and extra China tariffs expected on Tuesday. On the data front, US PC numbers dropped, while the rupee stays under pressure from ongoing FII outflows. JK, what's driving this chaos?
Good morning, Swaraj. So suddenly we are looking at too many things at the same point of time, and that's the reason why I feel even the dollar is not able to get a definite direction. On the one side, investors are looking at a steady stream of data showing U.S. economy weakening. At the same time, inflation remaining sticky. On the other hand, geopolitics, particularly the Russia-Ukraine war peace talks, have not gone as expected over the weekend, and that was quite a disappointment. And that was the reason why dollar was tending to strengthen over the weekend. But as the week started today, it has again dollar started to strengthen over the weekend. But again, at the start of the week, it has again slightly weakened. Uh, as there are new initiatives led by UK. Along with like-minded partners from Europe to achieve some sort of a settlement involving the US as well. And they are quite clear that there has to be some uh, uh, protection for the sovereignty of Ukraine, and US cannot be kept out of the deal, and Russia should not be made to dictate the terms. So it's a new initiative, and as some reports suggest, Europe has never been as united as this in on any issue in the recent times. So that's the reason why market is giving some side of a relief, possibly expecting some settlement to come over. And then of course from 4th March the new tariffs are expected to take place. But then there is even indication that the exact tariff that will be levied against Mexico and Canada starting Tuesday is still fluid. That's what the Commerce Secretary from US has said. Although Chinese additional 10% duty will stay, this is because there are some steps taken by Mexico to impose additional tariff on China. Uh, and Canada is yet to do that, but that is one of the demands that Trump has been making, that the goods they import from China and in turn sent to US should be tariffed by these countries. So we have another one day to know exactly what shape the tariffs will take. And of course, we have the the US data on Friday, which again showed that inflation is sticky, but at the same time, the personal consumption came to minus 0.2%. And it is after a very long time that we are in a contraction territory as far as consumption is concerned. This was as against expectation of 0.1%. Last month, it was a hefty 0.5% plus for consumption. So this is adding to the series of indications that US consumption and overall US economic activities slowing down, and that's the reason why even the yields have come off. The 2-year, for instance, traded below 4%, and this was last seen in October last year. And 10-year also traded the low that was seen last in December 2024. Since then they have slightly recovered. But if you look at the dollar, it has actually rose despite the fall in the yields. That is because of the geopolitics dominating. But as I said earlier, um, dollar traders or investors are caught between the weakening US economy and at the same time the haven demand of dollar because of the geopolitics and also the tariff news that refuses to go away. And of course, the European data was also, kind of reason for euro slightly dropping, because German inflation came steady, and eurozone inflation is also likely to be steady at lower level, encouraging ECB to hold on to a 0.25% cut that has been priced in by the market. ECB will meet on this Thursday for their rate decision. This week, of course, is going to see another big number from US, that's on the employment, and that's a crucial number because of the way we have seen job cuts that have happened in the government sector, and also the deportation of illegal immigrants, all of which would have resulted in lesser employment. Market will be very closely looking at all the numbers this week. Starting tomorrow, we'll have the JOLTS data, and then, of course, we'll have the private sector payrolls and the job cuts data, culminating with monthly jobs report in the non-farm payrolls. I think the dollar will remain in a range until all these moving parts show some signs of settling down in one way or the other. Till then, dollar should be slightly in a choppy range for some time. India, we had macro data on Q3 GDP that came higher than last quarter, which was, of course, revised from 5.4 to 5.6%. 6.2% was less than what the market had forecast, but still the improvement was seen to be led by a higher rural consumption and higher government spending. And manufacturing sector, of course, experiences slowdown. The full year GDP growth is now projected at 6.5%. Looks ambitious because that can be achieved only if the fourth quarter GDP comes at high 7.6%, about which there are not too much conviction. I mean, the analysts, because the economy is still recovering from the slump of the previous quarter. Of course, we have had monetary and fiscal measures taken in the recent weeks through budget tax cuts, as well as the rate cut by RBI and additional liquidity that has been infused into the market. So these things could take time to play out. That's why I'm saying achieving 7.6% growth in Q4. Not very bullish on that expectation. At the same time, the financial markets in India continue to be, particularly the equity market, continue to be under pressure. We had index falling 1.4% in one session on Friday, and in February alone, it has already slipped 5%. And it's the longest streak of 5-month fall that we have seen in the last 35 years of history of NSE. The last fall of 5 months at a time was seen in 1996. That apart, Nifty has now tumbled over 15%, and as it is believed in the financial markets, any market falling over 20% pushes into a bear market. And of course, we are a bit away from that. But looking at the way valuations have corrected, it's difficult to see, and also the prospects that India will grow better than many other countries, although it has also slowed down. I think it is difficult to see, India entering into a bear market. Already, we are close to a very important level as far as the Nifty is concerned, near 21,500 to 21,800. Most analysts believe this is an area where the market could see at least a short-term bottom and start some sort of a consolidation. Key for the market would, of course, be how the FIIs behave, and if FIIs do stop their selling, even that could be a big boost to the sentiment in the market. Rupee has, of course, traded above 87.55 also on Friday, after the indications that the peace talks were not going as smoothly, and also in anticipation of the tariffs to be imposed this week. Of course, since then, it seems to be holding around those levels. And we have even heard about nationalized banks coming in, intervening at 87.50 levels. That can continue for some more time, unless we see dollar index rising much more. I think 87.50 level seems to offer some good resistance. But any bigger rally in the dollar index, then Rupee can even test the previous record high at 87.90 in 1995. But for now, it looks like we may be in a slightly arranged market, awaiting more news from the global market, and also how the stock markets behave going forward, having reached a very crucial level on the charts. Thank you.
Thank you, JK. And the key narrative I think I took out of it was the stream of economic data from US. It's coming weaker, but inflation remains sticky. And of course, the breakdown of peace talks and the US relationship soaring with Ukraine is another major key point which has been driving the market. Tariffs, they remain fluid on Mexico and Canada, as said by the US Commerce Secretary. So implementation on Tuesday still remains quite uncertain. We had the PC on Friday. Inflation, it remains sticky. But interestingly, the personal spending growth was in the negative territory. Yields fell. The two-year US yield briefly breaking the 4% psychological mark. This week, we have got quite a bit of events, ECB interest rate decision, and of course, a lot of employment data from the US culminating with the NFP on Friday. For Rupee, we traded weaker on Friday and seems to be holding around 87.50 levels. I think key thing to look out would be how the equity markets perform and how the FIIs behave. That's it from us, sir. Thanks for listening. Tune in tomorrow for the latest in the financial markets.